Good evening, Tradespooners, and let's take a look at today's pick for February 5th, 2014. We're going to look at short Concur Technologies, ticker symbol CNQR. For you old Tradespooners, this is a previous pick that we've done in the past. It was a short, it was in December, and we'll take a look at that. As a matter of fact, in see recent daily picks, if you go to all closed and we scroll down, you'll actually see that in December 20th, we had a short call also on Concur. Now, that call did go against us, and we can take a look at it a little bit, but back then the stock was trading up, and then it gapped right up in here and actually went against us. We were stopped out, and so just so you know, that's why we use these different types of target losses and gains to get out of these positions, as well as use these fixed risk type of opportunities. So just wanted to bring that up, that we did look at this in the past. And let's actually look at today's current pick by View Picks and today's pick. All right, so we're looking at the risk-reward rating at a 5, which is in mid-range, and the value momentum at a 2. And you can look at our analysis report, see what the updates are going forward. And one major difference that we have now at our fingertips as far as information is volatility, in other words, the implied volatility change, the return on capital, the probability of success, and the estimated move average going into this expiration date, which is February. Those are the options we're going to look at. Now, the price action in Concur, as we had noted, has really been volatile to say the least, but it was trending higher basically over the last month. Close price as of the February 4th was 114.43, right off that 52-week low of 130.39, and it's well off that 52-week high, and it's well off that 52-week low of 62.01. Now, the implied volatility change did spike up. We have it at about 150%. It is actually coming off as of today, which is just basically telling us that we're not expecting huge volatile movements, but it has been on the move. Return on capital for the position is 56%, and the probability of success right now is being measured at 60%, and we have an estimated move average of $5.10. All right, let's take a look at the picks. So the stock trade is sell short stocks, ticker symbol CNQR. We're going to put an entry price of $114.43. Now we're going to put a target gain $20 lower than our entry price, which would get us out right around, let's say, $94.23. So we put a buy to close at $94 and right around 23 cents. So we'd also put a buy stop. Now buy stop is above our current price that we're entering in, 143. And we're going to put that in at 134.43. So that's our risk-reward parameters here for this short stock position. And again, we're recommending or suggesting that you use about 2 to maybe tops 5% of your available buying power for this particular stock position. Now we're also looking at an options trade where we're going to buy the February 115 puts at $3.40. Now that is a limit price. If we're filled, we're going to put a target gain above that limit price that we were filled, $3.40 higher, so that's going to be $6.80. We're going to risk the whole debit of the trade, the $340 per contract. And again, as far as risk and capital management is concerned, you're only going to be putting about 2.5 to those that have smaller accounts, tops 10% into the position, and be very prudent. The option spread trade is we are going to sell the February 115 calls for $2.85. We're going to buy the February 120 calls. That's our insurance policy to the upside in case it does start to retrace to the upside. We're going to buy those for $105. That's a $5 call spread that we're going to do for $1.80 credit. That is our max profit, $1.80. So if the underlying at February expiration, which is on the 22nd, is below 115, we will collect that $1.80. Now our risk is the $5 minus the credit we receive. That would be our total risk, which would get us out right around that 320 mark. would be our total risk, and that's going to be the requirement for the trade as well, or $320 per contract. Now, we are going to put a max loss, so we're going to put a buy stop on this particular credit spread. If the credit spread is trading $3.60, we took 180 and added that to our credit, we would have a buy stop limit, and I said buy stop limit order of $3.60. That's where we want to cover this trade. And as always, if you've never traded one of these strategies before, or you're new to Tradespoon, you can actually place in our virtual trade here at Tradespoon. It is our proprietary virtual trade, these strategies to work out your risk and capital management, as well as feeling more confident and educated on how these actual strategies work. As I said, the stock price, as I noted earlier, has been on the move to the upside, especially after we had earnings, and the momentum for the short term, though, has trended to the downside, and we're seeing that earnings has continued to deteriorate, and they missed their earnings estimates for the last 4 quarters. And here is the current news and commentary. As always, if you need any help, you can always email us at info@tradespoon.com. And keep an eye on those recent picks. As we had noted before, in December, we did have a short Concur position on, and so you can take a look at that as well as the analysis for today's pick, February 5th, short Concur Technologies, ticker symbol CNQR. All right, Tradespooners, that's it for today. We'll see you tomorrow on February 6th. Have a great trading day.